Something just changed, and almost nobody is explaining it properly. A few weeks back, President Trump told Americans the war with Iran would be over in 2 to 3 weeks. Today, we're not talking about escalation. We're talking about negotiations. So what happened? Did the US win? Did Iran blink? Or is this something else entirely? Because if you look closely, this isn't the end of a war. It's the beginning of a very fragile deal. And the most important part? It could still fall apart. Very fast. Let's start with the obvious question. Why the sudden shift? The answer is simple, but uncomfortable. The war got expensive, not just financially, but politically, strategically, and economically. And more importantly, escalation stopped offering clean outcomes. At this point, any further military action risks, a broader regional war, disruption to global energy flows, direct confrontation with other major powers. So instead of doubling down, the White House pivoted. But it didn't pivot quietly. It pivoted with leverage. Here's the key to understanding what's happening. The US didn't choose between war and diplomacy. It chose both at the same time. On one hand, you have negotiations. On the other, you have a blockade, and what Treasury is calling economic fury. That's not a coincidence, that's strategy. The message is very deliberate. We're willing to talk, but we're also willing to hurt you economically. And crucially, we're not giving up control of the Strait of Hormuz. That's the centerpiece, because whoever controls that waterway controls a huge portion of global oil flows. So this isn't just about Iran, it's about leverage over the global economy. But here's where things get more complicated. There's a limit to how far the US can push, and that limit is China. Because any serious attempt to fully enforce a blockade, especially on oil, runs straight into Beijing. China has both, the capacity to push back economically and the willingness to do it. And that creates a constraint. You can't squeeze Iran too hard without risking a broader economic conflict. The same logic applies to India. That's why you're seeing outreach, reassurances, signals that this isn't about shutting down global flows, it's about controlled pressure. So what you're watching is a balancing act. Apply enough pressure to force a deal, but not so much that you trigger something bigger. But here's the part most people are missing. This strategy has real costs. First, economic. The US could have cut off Iranian flows earlier. It didn't. Why? Because doing so would have created immediate disruptions. Now, it's choosing to apply pressure, but in a way that still carries risk. Second, military. When you impose pressure without resolution, you create incentives for escalation. And we're already seeing that. Attacks on shipping, harassment in key waterways. Because from Iran's perspective, if pressure isn't going away, then escalation becomes rational. And there's a third cost, time. Because every day this drags on, Iran gets space to rebuild. Missiles, infrastructure, capabilities that were degraded earlier in the conflict. So while the US is buying time for negotiations, Iran is using that same time to reset. Now here's where it gets interesting. The US is signaling seriousness, not by escalating, but by not escalating. Quietly, deployments have slowed, assets have been rerouted, movements have paused. That's not weakness, that's a signal. It says, we're giving this process time to work. But it also means something else. A rapid return to full-scale conflict is unlikely in the immediate term. The ceasefire, formal or informal, is probably going to hold, at least for now. So what are they actually negotiating? This is where expectations need to be realistic. This is not a comprehensive peace deal. It's a narrow agreement built around overlapping interests. The biggest issue? The nuclear program. The US wants removal of highly enriched uranium, a long-term halt to enrichment. Iran is offering to give up the most sensitive material, but keep lower-level enrichment for civilian use, and limit restrictions in time, not decades but years. That gap is significant, but not impossible to bridge. Now here's what's not being discussed. Ballistic missiles, regional proxy groups. Why? Because those are too hard to solve and too difficult to enforce, so they've been left out entirely. This is a focused negotiation, not a comprehensive one. Then there's the biggest issue of all, the Strait of Hormuz. The US says it's open. Iran says otherwise. And recent events suggest Iran still has the ability to disrupt traffic when it wants. So if there's going to be a deal, something has to give, and that something is likely economic. Think unfreezing assets, easing enforcement, allowing continued oil flows to key buyers. In other words, Iran gets compensated for not using its leverage. Because right now, that leverage is real. But here's the twist. It won't be forever. Gulf states are already investing in alternatives, pipelines and infrastructure designed to bypass the strait. So Iran's leverage is strongest right now, which is exactly why it's negotiating now. Let's talk about the best-case outcome. A deal gets announced soon. Implementation starts quickly. Shipping stabilizes. Energy flows normalize. The region, reluctantly, accepts a new equilibrium. Markets calm down. Volatility drops, and everyone moves on. That's the upside. And it's not unrealistic. But here's where things get risky, because getting a deal is one thing. Making it stick is something else entirely. There are 4 major failure points. First, politics in Washington. If the deal gets oversold, if expectations get misaligned. Second, internal dynamics in Iran. Not everyone is aligned. And enforcement requires verification, monitoring, oversight. Third, the regional wildcard. Groups like the Houthis have stayed relatively quiet, but a stable deal reduces their leverage. Fourth, Israel. This is the biggest one. Because Israel's objectives go far beyond this deal, and if they believe the agreement doesn't go far enough, they have both the capability and the precedent to act independently. So where does this leave us? Here's the reality. A deal is likely. A stable outcome is not. The US wants out, without losing credibility. Iran wants relief, without losing leverage. That overlap is enough to get to yes, but it's not enough to eliminate risk. And behind the scenes, the military option hasn't disappeared, it's still there. So when you see headlines about a deal, understand what they actually mean. Not resolution, not closure, not peace. What you're looking at is a pause, a negotiated pause with terms, and those terms can change fast. If you want to understand where this goes next, watch 3 things: shipping through the strait, oil flows to China and India, and any sign of regional escalation outside the core talks. Because that's where this story will be decided, not in the headlines, but in the follow-through.